Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-hosts, CoinDesk contributor Lawrence Lewitton and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
We're seeing a lot of green on the board today. Let's take a look at the CoinDesk Bitcoin price XVX index currently at $28,450. Bitcoin shooting up over 5% over the past 24 hours. The CoinDesk Ether price ETX index at 1807. Also in the green, about 4%, in the DFX CoinDesk's DeFi index at 124, advancing about 4.5%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So interestingly enough, Bitcoin is on pace for its best quarter in 2 years, outperforming ETH, gold, and the NASDAQ. What can we owe this advance to?
If I wanted to get my assets out of an exchange that was in trouble, I don't know, maybe I'd buy some Bitcoin and eventually put it on a hard drive or something. Look, what do I know? Just saying.
What could he possibly be talking about, Emily?
Sure.
Yeah, it's just interesting. I mean, we've talked a bunch about this on the show, but it's a little bit counterintuitive given the regulatory crackdown in the US, and Bitcoin is just doing its own thing, which could mean one of two things. It could mean Bitcoin just doesn't care about regulatory crackdowns in general, or it just doesn't care that much about the US, and it's just kind of, or it doesn't care about any of these things, and it's just following the Fed and interest rates.
Well, a lot of analysts have been talking to is that there's low liquidity out there in the crypto markets to begin with. So any news, up or down, good or bad, could make for a big swing in the markets. But for one possible reason for these green crypto markets, let's turn to the state of crypto.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Data from blockchain analytics firm Nansen shows that Binance on-chain portfolio currently stands at $64 billion. Reuters reporting that since the CFTC lawsuit, Binance has seen $1.6 billion worth of overall withdrawals. Joining us now is former CFTC senior trial lawyer Braden Perry, currently partner at Kenny Hertz Perry. Braden, thanks for joining us. And yeah, we're seeing a lot of outflows from Binance following this CFTC complaint. But I want to point out an interview that we did yesterday with Coinbase's chief legal officer, Paul Graywall. He said that the most striking part about this complaint was the fact that it specifically called out a number of digital assets as commodities at the very same time as those same assets are being labeled or suggested as securities by the SEC and elsewhere. And I want to gather your thoughts on that.
Yeah, thanks for having me. And that is striking with this complaint. It's an overall view of where the regulators stand, which is the uncertainty between who has what and where it's going. And I think that the striking part of the Binance lawsuit is the fact that Ethereum, or Ether, which the SEC has claimed as a security through its proof of stake, is now being treated as a commodity by the CFTC. And the question is, where does the industry look for guidance? And I'm not sure where that is at this point in time.
So I guess the other question I had was, does this set up a collision course between the CFTC and SEC in terms of, jurisdiction, what they can regulate, what is a commodity, what is a security?
It does, and it's long overdue for the industry because at some point, industry participants need to know what they're dealing with, who they're dealing with, and how it's going to be regulated. And this has been a 10-year question that has been plaguing the entire ecosphere of cryptocurrency. And so it will set up, I think, the lines of distinction where we need to go, how we need to go there, and have the regulators say who has what and who's regulating what.
So we're going to see something like a cop show where the FBI shows up and the local police show up and they try to get the same guy and then they argue over who has the right to take that guy. Is it going to be something like that? Because that would be interesting. But turning on to the situation itself, speaking of which, Binance US. Do customers of Binance US have anything to worry about?
I don't think the customers have anything to worry about. Obviously, the regulators are taking care of what they think they need to take care of when it comes to the violations of the Commodity Exchange Act. That's the central part of this lawsuit, is that Binance was doing things to evade regulatory law, and they have essentially told Binance to stop doing that or else. And I think that or else would be the shutdown of the U.S. System, but I don't think there's any real risk to those involved in Binance US. The regulators are there to make these changes. They've obviously had a hefty lawsuit to address some of the issues they believe that they have. And if that doesn't happen, then Binance US is going to be gone. But this isn't an FTX type of situation where assets will be gone. It will be a process where individuals can get their currency out before anything happens.
What's the timeline on this? So basically, Binance just keeps operating as usual while it fights this, or it could, I mean, it seems like this is something, and the same thing with Coinbase, right? Is this just going to sort of drag on for years? And in the interim, what happens? Like the exchanges just operate as normal?
So these types of cases take a long time. There has been a request for injunctive relief, which means that at some point, the CFTC can jump in and say this needs to stop. But at this point in time, until you're told not to, Binance US will be operating as it is. This is a complaint, obviously, by the CFTC, but not a judicial determination that they have done anything wrong at this point in time. So the process will take time, and it will be dependent on a number of different factors on how fast this process moves forward.
Mm-hmm. I think in the complaint as well, the CFTC was seeking permanent trading and registration bans from Binance. Could that possibly lead to a settlement where Binance US is affected, and you just don't, that they will try to eliminate all presence of Binance in the US?
Well, that's what they're asking for. And at this point in time, obviously there are jurisdictional restraints for United States agencies, including the CFTC, but they have asked for trading bans of the Binance entities as well as the individuals associated with them. And those trading bans essentially are trading bans on the U.S. platforms. And so there could be a settlement where Binance takes its global ball and moves on and leaves the United States alone. That's a likely scenario, but yet it's not been determined at this point in time.
Well, I mean, other than that, I mean, there's not much they can do, correct? I mean, like, other than say to CZ, you naughty boy. I mean, like, what else can they actually do? And then maybe collect a few $1 million. But can he go to jail if he's not in the U.S. and no one knows where he is, or if he's just...
So that's a good question. And obviously these are civil charges. So there's no jail time involved with CFTC actions. What they have asked for, which was, I think, significant, is restitution and disgorgement for United States customers. And that number could be significant, as well as the penalties that are involved. So generally, when it comes to CFTC, they ask for trading bans, disgorgement, restitution, as well as civil penalties. And they've asked for all of those in this case.
Mm-hmm. I understand you also, I mean, we're receiving news of late that Sam Bankman-Fried is facing new U.S. indictment charges over Chinese bribery. Your thoughts on that?
Well, it's interesting, and it brings into another law that they claim that SBF is broken, and that's the Foreign Corrupt Practices Act, and that's completely dissimilar to the trading activity and other types of actions, essentially saying that he paid $40 million to unlock his crypto that was involved in a Chinese investigation. So additional legal jeopardy that he's involved with, apart from all the trading activity.
What struck me about that, the charges, is that he actually tried to, first lobby, use legal means to unfreeze those accounts, but when all else failed, he just resorted to bribing.
And that seems to be the status quo. And I think you'll see that with his other actions. And, you try to play by the rules first. And if it doesn't work for you, then you just pay to get around those rules. And that seems to be what he was doing throughout his time at FTX.
I mean,
right.
Well, thank goodness our regulators and judges are trying to enforce the integrity of the CCP.
And cooperating with them as well, apparently. But Braden, thank you so much for joining us this morning. That was Kenny Hertz-Perry, partner and former CFTC senior trial lawyer Braden Perry. Coming up, we've got a crypto markets update with asset manager Arca after the break. Checking in on Bitcoin, the coin is the Bitcoin price XVX index currently at $28,473, gaining about 5.5% over the past 24 hours. The Coindesk Ether price ETX index at 1807, also in positive territory, about 4%, and the DFX Coindesk DeFi index at 124 in the green, over 4%.
And joining us now to discuss the crypto markets is Jeff Dorman. He's Chief Investment Officer at investment firm Arca. Welcome, Jeff.
Thank you.
Glad to see you. 72%, that's how much Bitcoin has gone up in the past year, or actually year to date. It's been the best quarter in 2 years. I thought this was crypto winter. What happened? I mean, is it all Fed? Is it all like people saying, "Oh, the Fed's not going to raise rates anymore. That's it. They gave up. It's risk on, everyone." Or is there something else going on?
Well, I think there's a lot of factors going on. In fact, I think I've been on your show 5 or so times over the last few years, and each time you asked me about Bitcoin, I would deflect and say, Bitcoin's not interesting at all. It hasn't been for most of the last 2 years. But now Bitcoin is the only thing that's interesting and is by far the biggest beneficiary of everything that's going on. So there's a few factors here. The first is what was happening with Operation Choke Point, or this idea of restricting crypto firms' access to the banks, coupled with all of the failures at regional banks and then eventually onto Europe with Credit Suisse and potentially more to follow. What happens is every single person, whether you're just an individual investor or you are a person who belongs to the executive board of a small business, every single person is now having to re-rank what does it mean to own something that's safe, right? A month ago, assets at a regional bank was deemed safe. After the events of Silicon Valley Bank and Silvergate and Signature and Credit Suisse, that re-ranking has to start with, okay, I want my assets in a money market at a brokerage account. That is the first thing that is safe. Then I want to have my assets maybe at one of those too big to fail banks, your JP Morgans, your Citis, your Bank of Americas. Then it's probably a bearer asset like Bitcoin or Ethereum. And then way down on the list is assets in a regional bank or assets in a stablecoin. And what that means is you have real flows coming out of regional banks and out of stablecoins, and that assets have to go somewhere. Now, some of those assets obviously went to bigger banks, but also some of those assets went into Bitcoin and ETH. And that's what we've seen over the last 2 to 3 weeks. There's been 30 plus billion of assets leaving regional banks and another 16 billion in declines of stablecoins. That money has to go somewhere. And even if it's only a small fraction going into Bitcoin and ETH, that can have a big effect on price.
Well, and some of those assets do have to go somewhere, and some of them are even leaving the centralized exchanges, right? I mean, we're seeing outflows from, look, it's about 3-4%, I don't know what it is, coming out of Binance right now because of in part, at least, because of what just happened with the CFTC, but also Coinbase is having issues, getting Wells notices, things like that. So is it really that safe for these institutions or smaller institutions, let's say the mom and pop hardware store that wants to store some money somewhere? Are they really buying Bitcoin? Are they really going to do that? Are they going to open up a Coinbase account and say, hey, I'm going to buy some Bitcoin? Or is there, is there something else going on? Why the outflows from these centralized exchanges? Where are they going with this?
Well, again, it goes back to, so 2 weekends ago, just about every small business, including crypto funds, but not exclusively crypto funds, was basically having war rooms on the weekend trying to figure out am I going to be able to get my assets out of the bank on Monday when the bank's open? This was before the FDIC and the Fed and the Treasury came in with the backstop. And when you're having those conversations, even if it eventually works out fine, in the back of your head, you are thinking, okay, this is not necessarily what I want to go through again. And I'm not naive in saying that all of a sudden some small business in Omaha is all of a sudden putting their corporate assets into Bitcoin. But I can guarantee 6 or 7 of the people who were in that war room in that small business are thinking about their personal assets and started to move some of those assets. And that goes with crypto exchanges. It goes with anywhere that you hold assets. If it wasn't a money market in a brokerage account, and it wasn't a too big to fail bank, you are questioning whether or not those assets are safe. And again, not all of those assets go into Bitcoin and ETH and into cold wallets, but some of it does. And specific to your question around centralized exchanges, I mean, you can see it in the trading volume. So, there's a great dashboard that you can put up that just shows centralized exchange volumes as a percentage of decentralized exchange volumes. And right now, or rather the other way around, decentralized exchange volumes are now up to 15% of total spot volumes, which is the highest it's been in 3 years. And that's a direct correlation with the assets coming out of centralized exchanges because it is not the safest place to leave your assets right now.
On that note, I just want to mention something we mentioned earlier, which was that Binance's on-chain portfolio currently stands at 64 billion, but Reuters was reporting that since the CFTC lawsuit, Binance has seen $1.6 billion worth of overall withdrawals. But interestingly enough, I saw this data point that you were citing that between crypto apps and banking apps, and would love for you to share what that data tells us about.
Over the last 2 weeks, downloads of crypto apps have jumped 15%, whereas downloads of bank apps have fallen 5%. And I think that's really important because if you go back to 2008, and this is not the same kind of banking crisis yet as it was in 2008 for a variety of reasons, but if you just go back to 2008, when Occupy Wall Street happened, right, that was a sentiment shift. That was individuals saying, I don't trust my banks, I don't trust the government, and I'm mad. And Occupy Wall Street was cute. It was a bunch of people in a park. The movement itself, the narrative was very strong, even though the actions were very weak. But also because there was no alternative. Now you fast forward to 2023, and it's the same response, right? We have a Fed that has completely lost control, right? You have Fed funds, which is now 100 basis points above the 2-year, which indicates the market doesn't believe the Fed at all and expects rate cuts. You have a Treasury who's lost complete control, right? Janet Yellen has flip-flopped 3 times now on whether or not to offer explicit support to banks. And you have, this basic distrust of governments and banks around the world. And there is something you can actually do about it. You don't just have to sit in a park and complain now. You can actually take your money out of these banks and you can put it into something like Bitcoin or ETH or some other bearer asset. And I think that's incredibly powerful and lost on a lot of people here is that, you're seeing people vote with their actual money. That's what it means when you have crypto app downloads rising while bank app downloads fall.
Jeff, a lot of the arguments you're making just applies to crypto in general, like what you just said. But why is Bitcoin just such the winner here? I mean, why is Bitcoin outperforming ETH, for example? Because in the past, a lot of times, like Bitcoin would rise and ETH would just sort of rise with it. Now we're actually seeing Bitcoin sort of doing kind of a little bit of its own thing. What is that about?
Yeah, I mean, it's too early to tell because we've seen these periods of time before. April 2019, for example, where everything shot up together, but then Bitcoin held its gains while others fell back to earth. You saw it at the end of 2020. Same thing. Bitcoin started to move first in September and October, but then everything else caught up. So it is possible that Bitcoin is just moving first and others catch up. But honestly, I think it's likely that Bitcoin does sort of hold its relative strength against other assets right now because this is exactly what Bitcoin was built for, right? Bitcoin is very amorphous. There's a lot of different narratives about what Bitcoin could or should be. But one thing we know is that Bitcoin is the largest and the most liquid of the bearer assets. It's the one that's the most well known. So again, if you just actually look at workflows of people and decision-making trees of people, if there's any hint at all of, I don't feel safe in my regional bank, I don't feel safe in my exchange, I don't feel safe in XYZ, you have to go through that progression. And if you can get assets into a brokerage account, that's number one. If you can get assets into a Bank of America or a Wells or a Citi or a JP Morgan, that's number two. But don't forget, they have way too many deposits right now anyway and don't want your money. They don't want your business. They're putting $2 trillion, in reverse repo back to the Fed every week. They don't want your money. So what else are you going to do? And Bitcoin and ETH are the largest, most liquid places to park that money.
But I do want to point out the Coindesk Market Index, despite the slight pullback in the crypto market overall, 5 assets have had double-digit returns over the past week, and that's Ripple advancing over 27%, Seller Network 31%, Brain Trust 12%, Litecoin 13%, and Radical, don't even know what that is, but over 11%. What are your thoughts on these breakthroughs, especially with Ripple?
Well, I think, week to week, day to day, there's always going to be a couple of idiosyncratic movements, right? I mean, even when macro is driving the bus, which it currently is right now, it's not the only thing on the bus. There are other factors that will always drive price. But I think a more interesting stat is this, right? The common narrative that we've heard for, 5+ years from lazy non-crypto investors is that stocks have intrinsic value and offer so much downside protection and digital assets have no value. And what we're learning over the last year is actually companies can run out of money and they can go bankrupt and you can get a zero in a restructuring and recovery, whereas protocols don't. Protocols hold their value. So we go back to June 30th, 2022, for example, where most people would say, oh, the second half of 2022 was toxic, everybody went bankrupt. Well, actually, Bitcoin's up 42% since June 30th, 2022. ETH is up 70%. DYDX is up 87%. Uniswap's up 20%. Atom's up 49%. Matic's up 137%. You go down the list, and at the same time, well, Coinbase stock is up 38%. That's pretty good. But BlockFi stock is down 100%. FTX stock is down 100%. Silvergate stock is down 97%. Signature Bank down 100%. You go down the list, and you're starting to see, I forgot Credit Suisse as well, down 98%. There is an argument here that because protocols don't actually have rent to pay, they don't have employees to pay, they don't go bankrupt in a downside scenario, and there's always that optionality that gives it value, whereas these companies, we're learning, either by actual default or by government seizure, can go to zero. And I think there's a real narrative shift that protocols are actually giving you not only high upside in a bull case scenario, but actually give you some downside protection as well relative to stocks that can be primed and actually give you a zero recovery in a restructuring. And I think that's powerful, and I think that certainly benefits more than just Bitcoin and Ethereum. You could look at Luna, for example, right? I mean, the Luna blockchain, if this was a company, Luna would be bankrupt. But Luna is a blockchain. It is still producing blocks. There is still a several $100 million market cap to the reorged Luna blockchain, despite the fact that there's absolutely no activity happening on there, right? And that just shows you the optionality and the option value of a protocol that can't go bankrupt and can't be primed in a restructuring.
Are you still into Luna, Jeff? I recall when the DPEG was happening that Arca did buy into Luna.
We buy and sell things all the time. I think that's an irrelevant question to today, but no, we don't have any interest in Luna right now.
All right, Jeff, thanks for your insight. That was Arca CIO Jeff Dorman. Coming up, from the catwalk to Decentraland, we're taking a closer look at why luxury brands are headed into the metaverse. That's coming next. Luxury brands like Dolce & Gabbana are participating in Metaverse Fashion Week right now. The event kicked off for the first time last year and was launched in Decentraland. Joining us now with more is Chief Metaverse Officer at Journey, Kathy Hackle. Kathy, good morning. So, this is interesting. We're seeing a Metaverse Fashion Week, and I wonder how successful events like this are at onboarding users into Web3. What's the participation rate like?
Yeah, so last year they had over, 100,000 participants and over 165,000 wearables that were, given or collected at that time. So, smaller numbers, but I think the numbers are increasing. And yeah, it's really exciting. I think the big news for this year is that it's multi-platform. So you mentioned last year was only Decentraland. This year it is includes platforms like Spatial, Over, and yeah, it's just really exciting to watch a lot more brands enter the space. And, Metaverse Fashion Week is starting to kind of be seen as as part of the fashion calendar in some ways.
you say it's expanding in platforms. Is one succeeding over another? And I don't suppose Meta is part of that. Is there what kind of decision making goes into going into some platforms versus others?
Yeah, so I think right now the collaboration Metaverse for Metaverse Fashion Week was just the Decentraland, Spatial, the platform, and then Over as the platform as well. I know that there are some also, for example, Tommy Hilfiger has a portal that allows you to go into their Roblox world as well. So it doesn't mean that Roblox is involved in Metaverse Fashion Week. It just means that the brand is portaling into other platforms. So I think it was a kind of an organized coordination between all these platforms. That being said, I do think that as Metaverse Fashion Week progresses, I hope to see, platforms like Roblox or even, Islands and Fortnite Creative, now that you have the Unreal Engine, come into play, and Metaverse Fashion Week expanding to more and more platforms that might not be Web3.
So Fashion Week, of course, yes, you do have these you do have these incredible pieces that are done that nobody will actually buy, or one person buys them, and it's like several $1,000s, tens of thousands of dollars, but really not meant for the racks. But generally, the whole idea is that it gives you a sense of what the direction, at least, of fashion. And that's one of the reasons why you want to be at these shows. You kind of want to get an insight into where things are going. Has that translated into the metaverse? Am I going to see any of these on racks at a local store? Is Dolce & Gabbana going to put any of these dresses out? Anybody going to do this, or is this still very virtual?
I think for most brands, it's still very virtual. What they do in the virtual space is very siloed from what they do in their physical retail touchpoints. Some of the brands, for example, Tommy Hilfiger has been changing that a bit. I was actually invited to New York Fashion Week's Tommy Hilfiger show last September, and they had the physical catwalk and they had a virtual catwalk in Roblox where you could see some of the same designs. Right. So I think they're starting to look at how to merge the physical and the virtual. That being said, there is culture and fashion trends being created in some of these virtual spaces. Right. So there are some changes. There's also opportunity for couture. So I personally, for Metaverse Fashion Week, I'm wearing a one-of-one NFT, which is Vivienne Tam's first NFT. She's a well-known fashion designer, and I'm the only one wearing that dress. Right. So I think that there are opportunities to create virtual couture.
So it's interesting because this is happening right now as some are speculating that the metaverse is not exactly over, but is at least in sort of like a doldrums. You have like Disney kind of stepping back, and a lot of, the WJ referring to as the metaverse, MEH-taverse. I'm just curious, like, how you see that. Do you see that as just sort of like, clearly you don't see that, right? I mean, clearly you're a metaverse supporter, but just, do you take this seriously? I mean, there's definitely been a loss of interest in the metaverse compared to, say, I don't know, a year ago. And we're seeing like metaverse land prices going down. So I'm just curious what you think about this and how seriously you take it.
Yeah, I definitely take it very seriously in the sense that there is this cool down moment right now, but I don't think that's necessarily a bad thing. I think that, we were on this train destination metaverse. A lot of people got in the hype part of the train. Now they're off. So a lot of us are continuing to build. I do think it's farther than we think. Right? It's not here yet. We're building towards it. So it's a longer term vision of what's going to be the future of the internet, right? So I definitely take it seriously. And I think, companies like Disney, that have to lay off a certain amount of people, the Metaverse unit to me in some ways was more of an R&D type of organization. So they still have a lot of people within Disney and within ILM X Lab, for example, working on metaverse related technologies. So when I hear someone say like, Disney is kissing, is kissing the way the metaverse, or like leaving the metaverse, it's not 100% true, because they have a lot of people still working on a lot of different metaverse related technologies.
Mm-hmm. On that note, what are some of the barriers to entry that are making something like entering metaverse fashion tough?
I think, there is that friction of people having to have a wallet. I mean, they can enter as guests, but having to have a wallet to have the full experience experience, I think is, a bit of an issue. And yeah, I think if we see this next year going into broader, into Roblox, for example, or into Fortnite or some of these, more mass market platforms, it'll be more accessible. But there is still friction, right? There's still friction. I attended Metaverse Fashion Week yesterday. I'm going there today, and sometimes things, servers crash, and you have to kind of revisit the space. So there's still, I think, technical issues, and there's still kind of friction when it comes to joining some of these spaces.
We also have we metadata showing that the median sale price for land in Decentraland has dropped nearly 90% from a year ago. How does that affect things?
Yeah, I mean, for me, virtual real estate is kind of a speculative asset, right? So it's I think it's part of the trend of people not being, it's part of the metaverse and the Web3 winter that we're going through, right? So I think that it definitely has an impact. That being said, I mean, you still have a lot of brands going into these spaces, at least in pop-up versions, right? Doing things in, spatial and Decentraland. So everyone from, like you mentioned, Dolce & Gabbana to Alo Yoga, who's all in on the virtual side of things. So yeah, I definitely understand why the price is down, but I don't necessarily think that is necessarily a reflection of the future of the metaverse.
Okay, we got to talk about this. Is really important. Fashion Week and all these fashion shows, the real important thing here are the after parties, the swag, the DJs, the drinks. Any of that happening? Because if it's not happening, what's the incentive for me to attend?
There's definitely parties happening. They're just more virtual in nature. So, maybe a virtual cocktail here and there. Not as fun as being physically at a, New York Fashion Week after party. But still kind of fun. I think people if you look at Twitter and look at, what people are posting, they're having a blast. They're having fun. They're seeing their virtual friends in there. So not quite the same, but still some people are really excited.
Got to get some good DJs.
Yeah, Lawrence missed his invitation to the Tommy Hilfiger fashion show. But
I just want the after parties. That was one of my fun.
Kathy, thanks so much. That was Journey Chief Metaverse Officer Kathy Hackl. And folks, don't miss her speaking at Consensus next month in Austin, Texas. For tickets and more information, head over to consensus.coindesk.com.
Well, somebody is really wanted, at least maybe not to a party, but that, of course, is Terraform's founder, Kwon. He was arrested, of course, in Montenegro, and he's being requested by both the U.S. and South Korea.
He's wanted the world over.
He's wanted everywhere. This guy, if you have something going on, you want him there. All right. Joining us to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk Absolute Must-Read State of Crypto newsletter. Hey, Nick.
Hey, good morning.
Hi. So, Kwon, give us the details on this. Like, we got 2 countries now who want him, at least.
And potentially climbing. So, this morning, Montenegro announced that both the U.S. and South Korea have requested extradition of Kwon. We already knew that the U.S. Department of Justice had plans to request extradition. They announced as much when they unveiled criminal charges against him last week. And we kind of expected South Korea to also similarly want him for extradition. South Korea has been investigating Kwon and the Terraform collapse for quite some time now. Singapore is apparently also potentially on the list. At the very least, Montenegro officials have said that Singapore is investigating and they're aware of that investigation. They have not received any extradition request yet, but they seem to think it may be coming. It's really, but what's really interesting is, Montenegro said that first Kwon has to serve some jail time for forgery. I tried looking up the Montenegro criminal code. I can't find any sentencing guidelines or anything like that. So it's unclear to me just how long that might be, but, he's a pretty famous person who allegedly tried to leave the country on a forged passport. I imagine it's not going to be just a week-long prison sentence.
So, Nick, one thing I've heard from now several people in Korea is that apparently the sort of Kwon haters in Korea are really hoping that he's tried in the U.S. and not Korea because they believe that the U.S. will be much tougher on him. I'm just curious if you've heard this or it's just something I'm hearing a lot from Korea. And I don't know exactly, how that works out, but there's definitely this general belief that the U.S. would hit him much harder than Korea would.
I think it depends on what charges we see coming out of South Korea. We do know that the U.S. has, we know how the U.S. is approaching this. They've unveiled their charges already. I wouldn't say, anything particularly out of the ordinary. We've seen these charges and types of charges before. So, as far as that comparison goes, I think it will depend in large part on what exactly South Korea might choose to charge Do Kwon with and what that, process looks like. But I'm not familiar enough with South Koreans, prosecution or criminal code, unfortunately, to have a sense on, just which side might be tougher, which country might be tougher.
You're busy looking at Montenegro's code right now. It's a lot of work you're doing.
Well, switching gears, the FDIC is also giving a deadline next week for crypto depositors stranded by signature banks failures. So what can you tell us about that?
Right. So the FDIC has said that they're reaching out to depositors of the Signature Bank and now the Signature Bridge Bank, saying they have until April 5th to withdraw their funds or they will mail a check to the address on record. The FDIC also says they're still trying to sell the Signet platform. So that's ongoing. Unclear yet whether there are any buyers or potential buyers or what the state of that is. But, the FDIC doesn't seem to want to just shut it down entirely at this point.
All right. Nick, thanks so much for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Let's check in with Crypto Twitter for our tweet of the day. And so we reported on this. We asked Nick about this yesterday, but now we have a bit more color on those charges against Sam Bankman-Fried. So DZ BTC tweeting, SBF charged with $40 million bribery of Chinese officials. And the breakdown here is early 2021, the CCP frees Alameda trading accounts on 2 different Chinese exchanges. After the accounts are frozen, SBF and co. tried legal means and lobbying efforts to free up the funds. After months of failed attempts, SBF and others tried a multi-million-dollar bribe to unfreeze accounts, and after which $40 million was transferred from Alameda wallet to private wallet and account was unfrozen. SBF then authorized transfer of tens of millions more. I guess, at least he tried to be, legal to begin with, but
if he had just done this several decades ago, it would have been part of U.S. foreign policy.
All right, he is up for his next hearing is Thursday at 11 a.m. So we'll be covering that on CoinDesk. That's it for our first mover, Emily Lawrence. Thank you so much for joining us this morning. I'm your host, Christine Lee. Meantime, check out the hash at noon Eastern, and we've got all about Bitcoin at 3. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets right after this break.